Я работаю в криптовалюте.
Hi, I'm Satoshi Nakamoto. Welcome to my news channel about cryptocurrency, where the most relevant news and promising projects will be covered.
Bitcoin ETF, a complete breakdown. What is an ETF? An ETF stands for Exchange Traded Fund. It's an asset that can be freely bought or sold on the stock market, just like shares of Apple or Tesla. An ETF works quite similarly to a company's stock. The difference is that instead of a stake in a business, an ETF share represents a stake in a fund that holds assets such as stocks, commodities, or in this case, cryptocurrencies. A Bitcoin ETF works in exactly the same way and allows you to profit from Bitcoin's price movements without purchasing the coin itself on crypto exchanges. You purchase a share of such a fund through a regular brokerage account. The technical aspects of Bitcoin storage, such as crypto wallets, Bitcoin addresses, and private keys, are confusing for beginners and discourage some investors. An ETF solves this problem by making entry simpler and more straightforward. How much does an ETF yield? For example, BlackRock's iShares Bitcoin Trust ETF, IBIT, became the most profitable exchange-traded fund, outperforming products that have generated returns for over 2 decades. The fund returned 33.82% annually. This is relatively good. However, the history of BTC prices suggests that Bitcoin is capable of much greater growth, for example, 1,000%. Study the price history and the history of BTC for a deeper understanding of how Bitcoin works. There's also an analysis of Bitcoin cycles. Learn how to catch the tail of the price. Regional factors should also be considered. In the US, Bitcoin ETFs based on the market price of Bitcoin are available, for example, BlackRock and Fidelity. In Europe, Bitcoin ETFs are unavailable due to regulatory restrictions, but Bitcoin ETNs, bonds backed by Bitcoin, are available. According to Just ETF, comparing different ETFs shows varying returns. However, despite minor short-term fluctuations, all of the ETFs presented have demonstrated exceptionally high returns over the long term. Why a Bitcoin ETF? So why don't investors just buy Bitcoin itself? A Bitcoin ETF simplifies access to the cryptocurrency market for ordinary investors, eliminating the need to understand wallets, security, and storage of Bitcoin. Advantages. Regulation. Regulatory oversight allows for investing with minimal risk. Easier for beginners. Everything works the same as buying regular shares, without the need to understand the complex mechanisms of cryptocurrency. Liability lies with the fund. If the fund is hacked, it is legally liable to shareholders. So the choice between buying real Bitcoin and investing in a Bitcoin ETF depends on personal priorities regarding control and access. Each path requires careful consideration before making a decision. Go for it. How does a Bitcoin ETF work? A Bitcoin ETF is managed by a firm that buys and holds real Bitcoin. Its price is tied to the Bitcoin held in the fund. The firm lists the ETF on a traditional stock exchange, and you, the investor, trade the ETF just like any other stock. The fund can hold actual Bitcoin or derivatives tied to its price, depending on the type of ETF. This creates 2 types of ETFs, spot and futures. What is a spot ETF? A spot ETF means that each issued share of the fund must be backed by actual Bitcoin stored on the blockchain. This means that large market players create real demand and buy real Bitcoin. What is a futures ETF? In contrast, a futures ETF is simply a contract on the future price of Bitcoin, not ownership of the crypto assets themselves. This can lead to higher volatility and differences from the spot price. Bitcoin ETFs also offer new types of trading opportunities, including short selling, where investors can bet against Bitcoin. How are crypto ETFs different from traditional ones? There are also some key differences between Bitcoin ETFs and other ETFs. First, some ETFs, such as those tracking the S&P 500 index, are stocks, so you receive a portion of the dividends that any company in the ETF pays to its shareholders. When Tesla pays a dividend and you own shares in an ETF that includes Tesla, you receive a smaller dividend. Bitcoin is decentralized, so this won't happen with a Bitcoin ETF. Secondly, as with other ETFs, you must pay a fee to the company offering the ETF. But with a Bitcoin ETF, some of your fees will go toward custodial and management fees for purchasing and storing the Bitcoin underlying the ETF. Why are ETFs so important for the market? The emergence of ETFs could catalyze mass adoption of cryptocurrency and attract colossal institutional capital, from pension funds to universities. The increase in the number of buyers leads to increased demand, and therefore an increase in the price of Bitcoin.
Like and subscribe to the Crypto Plus channel. Modern technologies have radically changed our society, where cryptocurrency has long been the means of payment. The concentration of capital and the growth of cryptocurrency turnover around the world is already today, where scattered small banks are being replaced by cryptocurrency cross-border payments. One of the most important modern decentralized tokens is Soviet gold chervonets, SOVAUCHER, built into the system of cryptocurrency exchanges and allowing financial transactions, which is the most suitable in the system of gaining your freedom and independence. You are on the right path, comrades.